Good afternoon, everybody. This is Mark Lambert. It's September 29th, 2013. I've actually showed what I call Marki Math, which is a derivative that I kind of come across by myself after taking a look at Marki Math and being totally frustrated by the way Marki Math works. Because the fact is, a lot of times, if you follow some of Murray's rules, that says sell here, buy there, and so on. You take a trade, but just because the market moved in a certain way, all of a sudden your octaves have changed also. So what 1 hour could be a very good low risk trade according to the system, the next hour could be a totally foolish trade to take because the octave has shifted. So basically I started dividing the market the way that I guess Gann basically, let me see, I'll show this message again. Basically, the way that Gann kind of laid it out, he said that the market moved in eighths and so on, and I don't see why these eighths should be sliding around in any way, shape, or form. So the Marki Math is very, very simple. I'm going to give you a quick run through on how I use it, and you'll find that it nails multiple pivots all the time, and you will also see that even intraday, these divisions of eighths, basically the market respects them. As the market is moving throughout the day, you will see it stop and pause at these lines all the time, which is telling you that these lines are valid. This is Friday's action, and I'm going to show like the last couple swings how you use Marki Math. Basically, it is based on percentages of moves. What I do is put in the actual low of 2009. You can put different lows also, major lows, and you'll also get different divisions that the market follows, but I'm sticking with the major one right now at this point in time. So put in 666.79, which was the March 09 low, and you basically add 12.5%. So if you're looking at 100%, you divide it by 8, it's 12.5%, 25%. 37.5%, etc. as you follow through. And basically this is what you're seeing here. So the first eighth would be 750.14 points. And then you keep moving forward as the octaves are growing. And recently we've been in the octave of 1666.98 to 1750.32. And we've actually been in that octave since probably prior to May of this year. And as the market goes up, you'll notice it will stop. Where was this May high that we had on 522, which was a predicted high for quite some time on my point? If you take a look at my trend line going across, this octave at 25% was the exact high. And then as you know, we came back down also, there was another octave hit there too at the bottom, also a Gann line, which is something I like to see. I don't like to see it working just by itself. And then we start moving back up again. Bingo once again. We come back up. We hit 50% of this same octave that I just showed right here between 1666.98 and 1750.32. And that basically at 50% we hit the high. Then we reversed it. We came back up. We hit 75%, hit the high. And now we reversed again. And now we're back down to 25% and also a Gann angle. One of the things too that I like to do, which I already pre-programmed this so you can actually see it, so I don't take the time to do it, but all I do is use a Fibonacci retracement tool on the Thinkorswim platform, and I just put it in as eights, 0.125, 0.25, 0.333, and so on. And I enter in the values that I got from my spreadsheet, and that gives me the octaves borders, which is 0% and 100%. I always add 1 1/8 and 1 1/4. 1 1/4 would be overbought or oversold, and you'll always see a bounce happen at that point in time. And let's take this last high for instance. Now that this octave, which was active at one point in time, which is active again, we're trading within its range, came down and actually broke down below this oversold section, which is telling me now I have to flip the octave. So at that point in time, I just put in this high, 1709.67, you'll see what it does. Bingo. That's the start of the octave, and the first 12.5% down would be, whoops, I gotta put this as a high, would be 1495.96. Alright, what happened here? Actually, I just lost it. Alright, let me replicate it then. Bring this to 1709. 96. I'm going to edit the properties. 1709.67, I'm sorry. And 1495.96. And here's our new octave. Actually, let me paint this black so that way you can distinguish between the two. And you can see when we had broken through that oversold section, it started a new octave. And I am expanding or retracting that octave from this high. And you can see we came and we supported right at the 3/8 level. Once again, was the 3/8 level plus a Gann line. And there's also other forms also that we're looking for that low to hold. And then from there, we started to expand back up again. We moved back up into the old octave. So I want to take this one away, and we're looking to see where we're going with this high. Once again, I'm going to show you off of using like the SPY, that high was a Gann angle from 07 at the same time. At the same time, it was also that octave's 75% level. And then we reversed off of there, and we're coming back down. As you can see, since for the last several months, we've been bouncing off of this level. We've been bouncing off 25%, then we've been bouncing off of 50%, now we're bouncing off of 75%. So now to see what's going to happen is I do believe we are going to continue lower, but as of Friday, we're pretty much at this 25% level and also a Gann line at the same time. And what you want to do is use this as confluence. Plus, it's also the thing too. We've gone up into this octave, which is a division of eighths, and the move from this low to this high was approximately 6.25%, which is 1/8 divided by 2. So when you have multiple things pointing to the same thing, it gives you a really, really low risk trade at that point in time. And, you know, I've been fortunate enough where I've been putting out this stuff pretty much live as it happens. And same thing, you go to ESs, and you can do the exact same thing, and you will see that this high right here was a 25% octave. This high right here was a 50% of that octave. This high right here was to the tick, 75% of that octave, also a Gann line. This is a 2x1 monthly angle from 07, all hit at this high. And also at the same time, from this low to this high, the market had moved 62.5%. That means 6.25%, which is half of 1/8 once again. And even still, when you're taking this one, just like I showed on the S&P 500, we had broken down below. What transferred over would be this oversold condition. That's telling me that the octave is shifted. That is the octave that is shifted too, because when you enter this high, which is 1705, and you minus 12.5%, the octave goes to 1491.98. You got 1491.88. I'm sorry, it's 88 or 98? 88, which I put in correctly. The market came right down and landed exactly on 3/8. And when I say exact, I mean it landed exact. Let me see if I can get this to activate. Getting the trend line. Very difficult to do. I got too many lines here. But this level, 3/8, was exactly this low to the tick, and that's what the market does all the time. And if you play around with this using various pivots and so on, you will see that the market just keeps climbing this ladder. I like using major highs and major lows to basically move these things forward. And it's very simple. You can use it on pretty much any trading instrument. I use it on the S&P 500 and the ESs because I trade the ESs mainly. And as you can see, amazingly too, even if you take an octave like this and you want to go intraday and divide this division by eighths, you'll see the market respecting by bouncing off of these levels all throughout the daytime. That's an intraday basis. So anyways, that's pretty much Marki Math, the way I do it. And what's nice about it is the octave does not shift at all until you actually move into a new octave, and you always know when you move into a new octave. So that's pretty much it. I hope you guys find this useful, and Godspeed.